morning or good evening or good afternoon. Big money, no whammies. All right. So I invited everybody today, besides the usual crew. Welcome, welcome. Welcome to this very special webinar. Sorry. All right. So let's do the routine, and plus anyone here who has any questions and extra people. Once I go through my analysis, we'll hang out for a bit and see what goes on. Talk. Checking news right now, as I always do first. So today, nothing for the pound. Pretty regular news day. It's really all about the GDP U.S. session. G20 meetings, if you care. What else we have? Some light stuff for the euro 5 minutes ago. All day is German preliminary CPI. All day? All right, a little bit of news for the euro, but really it's come and gone. The GDP US is really the only high impact in 5.5 hours. Nothing for the pound, which wouldn't hurt to maybe have something, so it needs a little help. Tomorrow is some stuff for the pound, yeah. All right. Next week is non-farm week, non-farm Friday, Wednesday, which can be, a little more news-driven and typically can set a background going forward into the next week's. But historically, that is, can get weird as you lead up to that news, as decisions get made kind of after that Friday. But also to mention about next week, it's July 4th holiday, and it also officially marks the beginning of when the charts may begin to really die out and slow down. Maybe not. You never know when. But really we'll know once we get to like July 8th, July 9th, the Tuesday after that. If it's normal, the 9th and 10th after that holiday and everything, that's a good sign. If not, if it doesn't kind of wake up after that, we'll see how it goes. Anyway. So with no news until U.S. session, and typically things have been starting out a bit slow. It might be a little slow and get those later in the day moves is the way it's been lately. To the charts. All right. So yesterday, this is my stuff we had marked up yesterday, and we're talking about if anything's going to go on, maybe a buy from here. And we'll talk about the background and everything, but you know what? Let's do that first. So, where are we? The main thing is that we were in an uptrend with good momentum and looking to go long unless the chart, right, the daily chart says that, and looking to go long unless we see high volume weakness or any reason not to, which would be high volume weakness. And here's the last couple of days of that trend where there really was no sign of weakness coming in, no reason to do anything but trade the trend, right? And then we had this, which threw things off a bit if you are learning my stuff, and you're kind of looking at that going, I'm not sure how to define that, right? Is it strength? Is it weakness? It did bounce off a fib area, which is typical of strength, but also, it's just an odd candle in the result, right? So really, and we looked at it yesterday, there was certainly buying down here. If you look at the 5-minute chart, as we know, signs of strength. It was also just sort of a mix of buying and selling for a little while. We can take a quick look at that. Where am I? So you have the typical behavior of strength coming in an uptrend on a down move. So that stuff was there, but there was also pretty strong selling, and this guy said, okay, there was also a lot of activity here on this candle, a lot of selling here, and that's one thing that kind of popped out is, okay, maybe it's not so clear. And then also looking at the result, right, which is nothing I invented, it's VSA, the effort result. The result of this, I mean, not just this candle, but where did it go? Did it come down off of that? Did it go up? And without a result, it was a little, okay, throws it off a little bit, right? Which shows some uncertainty. And again, there was a mix of buying and selling here, but we do see strength where we needed to see it. So I was still leaning bullish. And on other pairs also as well, there was just, some of them just were very sloppy in that, kind of worse than that, and no particular result to give us a clear background going into yesterday, just to kind of note that. So in this case, it's really getting out of this area and getting some lower prices or higher prices we were talking about yesterday to see what's going on. And I was not going to be taking a trade, just to kind of put it, in this area where we started the session and we went nowhere and nowhere. We'd have to either move up or down out of this thing to show buyers or sellers or what's going on, right? We need some new information. But again, generally, to keep it simple, may have not been a perfect 5-minute chart, but still we saw buying. It's an uptrend. It's a rejection. That's where we saw that buying on the 5-minute. So we had marked up yesterday. It's too many lines now. Marked up yesterday a simple fit, another revisit of this fib area. And that also made, I just deleted that, a fake breakout pattern, right? So all of you know this stuff. Okay, how many lines can I get rid of right now? So that's why we had that there. It's a fake break of the session range, which of course, I like, and another test of the fib area, right, in an uptrend that really didn't give us any reason not to look to continue. And really to confirm, is there still this reaccumulation going on in this area? So it barely got there, but it did. Fake break and hit a fib during an uptrend, right? It's the same old stuff we all know. That didn't play out much, just to show that it was a right setup. When things just sort of fizzled out, some weakness came in, and that was it. But just to understand and show that it was a right setup if you took it and all that. And here's the 5-minute strength. This is like picture perfect. Here's the test. In this case, it didn't really set up an automatic rally here. Why? Because no supply. There was just not enough selling here on the test. Very, very low volume, right? Everybody should understand why this thing just went after this situation, right? At this point, this is entry, basically, right? No supply confirmation through the test area on such low volume, it can't even set up automatic rally, right? And of course, there's the reaction off the fib. This is all clear as day, right? What all this is. So any questions on that, let me know. It should be really straightforward. And hopefully those of you who are learning the stuff in here saw that, maybe took it, but it warned you, okay, there's weakness coming in. And it got late and sort of fizzled out. So I ended up taking partial profit, getting out break even, and got very little. But just to show, it's what happened later that ended up just not being able to move. But it was a proper entry, just to show that. Now, is there any reason not to still be bullish, particularly seeing that, right? That confirms after that volume that wasn't so clear, maybe perfect on the day before. I keep mentioning that because the volume was so high too, which it says it, it's buying and selling, and it's not your typical. But to see this gives me confidence again that we're just simply in this bullish environment, and this was reaccumulation as we know it, and simply look for long entries. So that's what I'm doing. All right. And I was going to say, well, I'm glad we're down here again, but now we're up here. That was quick. What the heck? Does everybody's chart look like this, or is it just this feed? I'll have to check. All right. It was not high impact news for the euro. Or was it the German preliminary CPI? I don't think so. Whatever. But to continue the analysis, so markup, reaccumulation confirmed. Visiting this area again, not surprising. We're just going to bounce off of it. This is where they're buying from. We're a smart money position from here and here now. Are they still in those positions? Yes. Are they looking to get out? No. They're looking to buy, get in all around here. And this guy just couldn't stay there. This was earlier than I'd want to be getting into a trade, and then off it goes right now. But we'll see if it gives us another chance down there. At this point, I'm just thinking about what I really need to be putting on here. We'll just do with the fib and the zones. Oops. Smooth. That and so, of course, if we move down, we'll talk about if we move up and if we move down. If we move down, much better. And if we could actually end up doing another fake breakout. We could do this over and over again, right? Particularly in this area, but anywhere in here, right, should be, if we do get down here, we should be seeing demand all over the place, all through here, right? As soon as you hit that low or slightly below it, strength should be coming in. If it's going to continue down and doesn't bounce due to that, this is just later on if we end up down here and we're not in session. All through here, seeing demand and higher volume coming in at lower prices. And that would be basically the 618 overshoot and as low as it could possibly go. And that would have to have, a lot of buyers and a nice 5-minute rejection strength, fake break on the 618 and all that. But all through here is where I would take a setup as far as what would be best in this situation, right? Once it breaks this point, that's a whole other story, and it's likely to continue. So you get your good risk reward, stop loss, all that, and this is our really classic situation. But again, as early as here, just like we did yesterday, we had a support and a fake break and a little into the fib. So that's if we move down. Hopefully not too much to ask for if we can get down there. I wouldn't do anything like, looking to get in off something like this right now or anything like that. If it's going to come down, I would like to see that stuff. And right now, the way it's behaving, definitely doing nothing until it's normal again. So a very good textbook trade potentially if we move down. If we move up, you end up a little late, a little behind, not the ideal. If you're looking for those A+ entries, right, that could be here. And again, thinking as this is really the best places to buy, this is where those spikes in demand are coming in, and if you're getting into this area, you're really a step behind, right? Having said that, how would you do it? It's really a matter of seeing no supply show up in obvious places that sellers would be tested for, like that. I'm not going to worry about that line. So for example, this is just logical. if you know basically how to read the chart the way I read it. If we're in a bullish environment, again, we talked about moving down being the best, really. But if we're in a bullish environment here, looking to go long, and we get through this with no supply, right? Basically, the opposite of weakness. There's no weakness coming in. There's no overshoot, fake break, sign of weakness, where we're just sort of floating through normally, and we can clear that. Then it's likely getting to the high before you see any selling coming in. Is that a great trade? No. It's kind of close to the high. Be like 12 pips from the high. Or at least the swing point. Okay, it's not the high, it's the swing point, right? But that really points to that. At this point, this is another test area. But logically, getting through here without seeing weakness says we get here. Getting through here without weakness says we get here. So that's sort of the chase trade. If it looks really good, then I consider taking those, and I don't like doing a large risk. So, if we're floating up, and some of the scalp stuff, and we're just making these waves up without weakness coming in, after we break this, I know it's going to this point. And if I'm in the trade and it's getting to this point, then maybe a little bit of weakness shows up because of the level, and it just kind of makes it through as a result of the activity or break test. We stay above it, then we're likely going here. If there's any trouble, you could always close part of the trade and break even. So that's sort of the second option, right? Just logically, it's the two ways to get in here. I'll just leave that. Just leave that there. But we want to move down. Move down, again, buying off of this stuff. You put your stop loss here. It's in a place where you wouldn't even want to be buying anymore if it went to that point. There's a reason to get out. You get in here, you put your stop loss where? Here? Fake break gets you. Imagine it goes down there and sets up, right? But if there's no supply, no selling, you shouldn't be able to get there. That's the idea, right? We are in a bullish environment, so it should be pretty logical there. Now that's one of the cleaner charts. Some of these are a bit sloppier, I think, here. Pound, gosh. Rough day yesterday. Trying to figure out what it wants to do. We talked about yesterday. We'll go through individually, but we talked about yesterday what does the market know, right? Yesterday it knew that the Australian dollar was strong. The pound was confused. We started seeing yen weakness, making these all bullish. That's what the market knows right now. That's what it's doing, right? Is the weak yen. So everything is bullish against the yen, trending upward. And the Australian dollar is also trending up, obviously against the yen, but also against the dollar, just basically riding the 14 EMA, saying it's a good, healthy trend. And we saw this yesterday, for those who were here, looking at really lack of any selling, really expecting this. But just to note that is trending up against the U.S. dollar. The pound is not, and the euro is not. So it's not U.S. dollar weakness that's making this trend upward. It's Australian dollar strength. So Australian dollar is strong, yen is weak. That's what's in effect at the moment. Everything else is let's see, which is this guy. See if we get buyers here. See if we get them, and let's figure it out. But the background says it's good. We'll see if it all comes together. And the pound is just confused. Again, everything's moving up against the yen. So it's not a strong pound that's causing that. The pound Australian dollar, the pound dollar, they're all this good amount of activity yesterday just led to nothing, and there's not clear strength and weakness, right? And if you're looking at that saying, I'm not sure what it is, the market is unsure as well. There's not a consensus. If you look at this situation, this is more bearish because why? The Australian dollar is strong, of course, that's why. So the pound is confused, Australian dollar is strong, so this is going to start coming down, right? Not showing strength. Euro and pound, right? They're the ones that are a little uncertain. Compared to each other, they're not doing anything. So we get an idea what's going on. It's a pretty decent situation there if you're looking to go long. It's kind of weird drawing a fib there because I know how these things go. Other brokers will have different spikes sometimes. But either way, this is bullish and really could give textbook stuff. Fake break in here, break test continuation, 50 EMA. Wherever that fib ends up, I don't know. It's kind of low anyway. Whatever. But there would be nothing wrong with looking to buy in here on strength. Strength plus a little fake break on a 5-minute, right? That would make a little perfect little setup right in here. New high ground. Where is this guy? Yeah. So you see the recent resistance back there. And then to look at it and see that that resistance did not bring weakness is sort of a big deal. So very bullish, very bullish. Could give a textbook trade there. Again, that's the old resistance. So this is new high ground on a trend. That's where weakness would come in, right? If it was going to reverse and fake break and all that. Look at that lack of selling. Very bullish there, very bullish. This actually is a little fake break in there. Let's see what's going on. So early that it did that. Yeah, so any down move in strength, I would even consider a fake break of this level, right? Because it looks so out of balance. Even though we're so high in the trend, it's very little selling. So I wouldn't expect much of a retracement. Definitely nothing wrong with that. If we meet here again and see a double bottom fake break, definitely. But anyway, down moves in strength. Hopefully today on that we give something. All right, let's just finish going through properly. Pound is confused. If you're confused looking at the chart, then you're reading it right because the chart is confused. I don't follow fundamentals, and I don't know if that's a factor or not, but the chart says that there's uncertainty, but not where there's lack of activity. There's just lack of a consensus. Again, yesterday with that, not seeing focused activity in any area that we can highlight in the background, and against being still in that range. Not able to see new high ground or low to see, our strength coming in on a fake break, or is there a breakout, or what's going on up there? Maybe we can get there and find out. So in situations like that, I mean, if it was bigger, I would trade the range, but because it's saying range volume-wise, it's saying equilibrium. But that's kind of too small of a range. If you look to the left, it's really not the range right now. But we just need information, right? At least we're up here and we could see maybe what's going to go on, right? If we get a high volume spike weakness and come down, we have something, right? It may even show up on the 1 hour. If we don't see weakness, we break out, then we know something else too, right? You could break out and start showing signs of strength, right? But as long as it's sitting in here, and again, to apply, where's smart money positioned from? Are they still in those positions? There's a lot of good steady activity here. There may not be big spikes, But if you notice on other days, you see the low points and low points. This is just like steady, steady, steady activity. And if you add all that up together, it's a lot, right, for many hours. And again, it's just up and down, up and down, up and down, buying, selling, buying, selling. So position from here in both directions. That stuff's got to work itself out. But basically, we just need the imbalance to come back, right? If higher prices don't show sellers, we have an imbalance. We have more buyers than sellers. We have a bullish environment. And if we get weakness here, that tells us something too. So we'll see how it develops. If you go to the daily chart, just to back out and see, are we in a trend? Is there any momentum? At this point, the downtrend structure is gone. We have a range structure with a fake breakout of this high here, fake breakout of this low here. So we can't trend anymore, right? We're kind of getting stuck. And again, this doesn't help either. So the pound is confused. I rest my case. If we look at the 5-minute yesterday for any more clues, maybe, right? Maybe there was some concentrated volume somewhere. Maybe not. No, none of the usual stuff here. It's rare to see this. Again, we could have had a pop of strength here and then a pop on volume here, right? And say, okay, there was accumulation from there, right? We could say, but no, nothing special there. Or you could say through here we had weakness. No, nothing pops out. Finally got out of that, started to move down. Oh, maybe it's bearish. No. Right back. Is there a lot of strength? No. So pound has to figure itself out. And let's just go right to the pound yen. No, actually, let's not. With a directionless pound, it's going to be bullish against the yen, right? It would take a lot of weakness on something to be bearish against the yen. So it's really just pound dollar that's not suggesting anything good at the moment. Make you the presenter. No, it doesn't work like that. But all right. Welcome. There's more people here than when I started. What's up, guys? So I'm just doing my initial analysis, and then also, if you have any questions, go ahead at any time. And like I said, I just invited everybody off my list today. I'm sure there's a handful of people that bought the courses. If you have any questions. All right. I'm just taking my time with the analysis here. So we did these guys, and we have also kind of an overview of what's happening here. Now it's going to get easy for the next bunch of pairs. It's going to be very simple. Trend or momentum? Trend doesn't matter. Strong momentum as far as direction. What's to our left? We got a little bit of space. There's no fib to draw in there. Okay. So obviously we are trending up, and there's not weakness, which means what? Looking to buy. All right, very simple. New high ground early today. Couldn't help itself. And of course, bouncing off the 14 EMA is a symptom of a strong trend. And these are all little fib retracements. There's one there, and then there's one there, more or less, right? As I said yesterday, I was hoping for a more normal retracement, but there's just not enough selling to even do that. And typically, this is not going to go on forever like this. I mean, another day riding off of 14 EMA, very unlikely. Meanwhile, that's all there is to the left. This one pulled back and did a fake break, right? After a couple of 14 EMA bounces, you got the fake break there. This guy rises up to 14 EMA, and then you get more of a retracement. I don't think it's going to do that. I'm not going to bet on it doing that days and days in a row. But it's whatever the chart says. It says no weakness is coming in, but at this point I wouldn't chase it obviously and buy up here, buy into the high of the trend like a noob. But ideally it's the regular retracement. If it doesn't want to do that, and it's just a runaway trend, because that's what it is. There's no such thing as overbought. It's just more buyers than sellers, and that continues to be the case. So there's a trend. And we could end up with these. Let me just draw in an example. So if we move down, we'll talk about that. If we move up, I don't chase breakouts. I'm not buying into here, right? So it's a matter of letting it break out. And then I could even just draw in a hypothetical clean situation there, like that. And of this move, it's like a fib retracement, break test continuation. It's saying it's not a fake breakout, it's a real breakout. If it acts as support, we could get a sign of strength in here. Right. Okay. 14 EMA is going to be moving up. So that would be the way I would handle the breakout. If it just wants to break out in a straight line and run off, that's fine. If I miss it, I miss it. I could always take a 5-minute scalp entry or something to it. But chasing breakouts is not really what I do there. So that's an example. Now, it could go higher, and then you'd have a fib a little higher. It could be a little smaller, and maybe you wouldn't want to go in yet, right? We'll see. We actually can see it. So that's if it moves up, letting it break out and not chasing it, and then take it from there once it's proven itself, basically. So on the other side of that is just regular retracement, reaccumulation, fake breaks, fibs. This is a big fib. It doesn't not have to get all the way down there, but just to be thorough. Okay. If it ends up there, that's good. But it may not. It may not have enough selling at all to do that. As far as these areas, I'm kind of avoiding them because they feel so kind of random. But again, if we're talking about moving down, it's a matter of, I'll draw this guy in just for the hell of it. It did bounce off it, so why not? But again, it's just a matter of if it does want to move down. Seeing where, when, if strength comes in, buyers come in. That could be a thing. If this area does not show weakness, but you're lucky enough to see this price again and strength, yeah, it's likely to break out. Fake break, small fib, respected the fib the first time. Logical, right? So any sort of down move in strength, we got some areas marked up, stuff that I would look for. I'm messing up my levels. Do I want this guy here? No. Whatever. Okay. So again, most of you know this simple uptrend. Either looking for down moves in strength, show up in a way that we're familiar with, or let the breakout happen to the upside. Don't chase it, and then take it from there. Treat it like an uptrend after the breakout has occurred. And we're pretty much dealing with all that all around. So again, the key is that if we have this going on to our left, strong momentum and new high ground, And there's not weakness coming in. It's that simple. What else do you need to know? Nothing. Buy it. Mark it, buy it, close it. That's my new book. Again, we see accepting higher prices on low volume. This is a nice looking trend, not because there's so many buyers, it's because there's such little sellers. That the buying that is there is just creating this. Able to trend upwards late in the day on low activity. There's just such little selling that the buying that did go on, very little, was able to do that, for 5 hours. Slow and steady. So just not much selling here. In those situations, of course, the 14 EMA can give you the bounce, as we know. And if that lines up with that fib, that's nice and all that. So, but this is all going to be the same. So down moves in strength, or wait for the up move, wait for the breakout, and trade it like an uptrend after the breakout. Of course, as a reminder, why? Fake breakouts happen all the time. But it's a step behind, right? Buyers who bought through here, as we know, this is a possible target, profit-taking area. That's why we get weakness into new high ground like that and fake breakouts. So you'd be buying as the buyers are actually in a potential area to get out. You'd be a step behind. They would do well, and this could come down, right? It's a step behind. If it pulls back and we see them buying, reaccumulating, then we can kind of join in with them at the right price area. As far as the daily chart, I don't even care. None of this stuff really matters. It sort of does, as far as maybe knowing what's coming up. But point being, it's not stopping until weakness comes in. It may have a retracement, but it's not going to go bearish unless weakness comes in. Some high volume leading to a down move. So again, just to be thorough, if there's a new high, I have to redraw this fib. It's probably not going to go that low. Then I can just start drawing fibs all over the place, whatever. Down move in strength, we'll know it when we see it. And this could be... Now, market open gives this spike now. It's just gotten worse over time. Used to not be this way. And this happened as new high ground. So it's hard to trust that that's really weakness coming in because it's always high volume this time of day. And it's kind of annoying when you are in an important area and you get high volume no matter what. So you can't really trust it. Now you can. So if we go up again, we can see. And also, we don't have really a bearish result off of that weakness. So I'm not taking it too seriously. From a 1 hour point of view, not high volume or anything like that. But these are all going to be the same. Retracement and buy or let it break out. How many times can I say it? A lot of times, I guess. Now, it doesn't have to be this, but this is sort of just typical. Maybe it'll do that. The deeper retracements, the fake breakouts, blah, blah, blah. Okay. See where we are before I go when we end the session, and I'll just update the projections at that point in time. Maybe we'll have some more information. Now, like I say about these things, besides the AJ, which is bullish also because the Australian dollar is bullish, these guys are all bullish because the yen is weak. EJ, pound yen, dollar yen, anything yen, besides Australian dollar. They're all bullish, not really because they're bullish or lots of buying on the euro or pound or whatever. It's because the yen is weak. So what does that mean? That if one is setting up, the others should be behaving similarly to tell you that this is the yen driving the move, right? So if you're looking to buy this here or here or whatever, these other guys should be more or less moving down, more or less testing for buyers and doing similar things. They may even really be in lockstep, which happens a lot. They're all doing break test, 14 EMA, little fib in there, and they're all kind of hitting it around the same time and all hitting strength. Okay, then that tells you that it's yen driven, and that's really what we're looking for. Because you could have a situation where one sets up and the others are not behaving that way at all, and then you know that it's not yen really driving the situation, right? Okay. All right. So we know where we are. No questions? I must have just explained it so perfectly. Let's see what this guy wants to do up here. So at this point, just let things develop and see what we get. See who's in here today. Amar, yeah, I read your email. I hear you about that stuff. Keep up the good fight. Amar, no, it's yeah. Um, just because people ask. Question. I'm wondering how many good setups. Okay, good. A couple questions. I'm wondering how many good setups you find on a weekly basis. I mean, trades you can actually take on a weekly basis. Well, it depends how long you're on the chart and everything. But I'm most of the time doing this analysis early and then marking up my levels. I'd say 3/4 of the time I'll get a trade. At least half the time I'll get a trade on any given day. Maybe slightly better than 50-50. Now that's me being picky and looking for, the best setup to come to me. Typically, I usually start off very choosy and picky. If I get a good one, that's my one. If it's playing out well, I'm good. Of course, I may take two or whatever, but I'm looking for that one good one is kind of the goal in my mind. I also don't trade Monday and Friday, but if I traded 5 days a week, I'd probably have anywhere from 4 to 10 trades. It really varies. Just talking about scalps, talking about multiple pairs can set up and this and that. But that gives you an idea. I used to trade a lot more. Quality over quantity became the goal. But it's certainly not a what do I say, a vending machine where you just, okay, if you get this many per week, that's what you're going to get every single week. Of course, sometimes there's setups every day. Sometimes it's a really shitty week, and the charts are just confused, and there's too much news coming out, and you know, take it as it comes. Okay, what else we got? Okay. Okay. I just skimmed through the question. I'm going to have to do my disclaimer speech again. Can I ask a question? Yes, you may, of course, anytime. You have mentioned low volume breakout on 5 minute for entries in your courses. But most Wyckoff practitioners mention high volume breakout higher than original anchor point. Do high and low volume both work? Okay, so it's a matter of understanding why and all that. Okay, the disclaimer, the thing I always say is, and you may or may not heard, probably didn't hear it. As far as the way I personally trade, is I learn the Wyckoff stuff, I learn the VSA stuff, I learn technical analysis, I tried a billion indicators, I tried this, that, the other, market profiles, and blah, blah, blah. And basically, the volume stuff and the Wyckoff stuff really got me focused on, okay, what's really, really going on? That was like 10 years ago. And then it became a matter of, okay, but I have to figure this stuff out. And I started making some things my own because that's what makes sense to me. And that's what makes sense in real markets. And I have complete logical explanations at this point for many years as to why I do some things differently. And I guess you could pick whichever makes sense to you, but I can explain and all that. Do you know, first of all, why they say high volume is good on a breakout of let's say a automatic rally or something? Well, they'd probably say it because, okay, if you're buying this high volume, okay, then there's a lot of activity. But the thing is, I'm trading based off imbalance. And if I have strength in the background, which is why I would be buying at all in VSA or accumulation or reaccumulation in Wyckoff, and you're looking to buy and you're already seeing strength and you're already confirming accumulation, reaccumulation, and you have a situation where you also see no supply into higher prices, lack of selling into higher prices, not a lot of activity selling, so low volume breaking to the upside. So now you have an imbalance that's shown. Smart money's long, you have strength in the background, demand is present, they're buying into down moves, and the only reason they do that is to eventually mark up price. And by having a lack of supply, price is going to mark up from buying. You get into a markup phase. How else would you get into markup phase besides lack of supply, right? And that's the low volume I'm talking about that gets you from, let's say a range into an uptrend, and that low volume break of the range or automatic rally, to me, makes perfect sense. I see it all the time, and the thing is, I had to figure out why, and I found the logic to it. It's not something that I thought up in my mind and then all of a sudden applied it to a chart. I saw it on the chart, and then I'm like, okay, what's going on? The thing is, it's very straightforward, right? Makes sense? Tell me if that makes sense. Now, let's say that you're in accumulation and you're trying to break out into a markup, and it doesn't break out and go into markup because there's weakness coming in, right? Let's say higher prices may attract the sellers, right? Weakness appears on up bars, however they say, right? So you're trying to move up out of accumulation and you get weakness, and that's going to come in on high volume. But you're also told high volume is good at that point. That's what you said, right? And then you have to look at the result. And at that point, you're going into even higher prices to confirm that. And if the higher prices already brought a lot of activity, you may be running into weakness again. It's not showing an imbalance. It gets a little gray, right? To me, I don't trust high volume breakouts, because if you look at a fake breakout, the ones that fail, they have high volume. And again, if you just forget all of this philosophical crap and just think people are buying, right? And the higher prices are not attracting those willing to sell to them. The sell activity is not there. So therefore, the buying that's going on in the market that's even creating this breakout is going to likely to continue to bring prices up. Large sell orders start coming in against it. Okay, now you're going to see some high volume. And it gets squashed down and all that. Okay, tell me if that makes sense. I also don't do like no supply at a support. Like, that hurts my brain to even think about. Why would there be no supply at support? You're at a support, so you'd be actually looking at no demand, if anything. You're at a support area. You're testing for buyers. So for me, it's all completely logical and right, and that's the way I do it. It makes sense to me. I could maybe explain it better if it wasn't 4 o'clock in the morning. Hopefully that's good. More coffee. So what's up with the charts? Anything developing? But let me know if that makes sense. Anybody else have any questions? And this is what I always say when we get into this discussion about supply and demand, and that's what moves price. If you go to YouTube, many of you have heard me say this a million times. It's good advice, though. Go to YouTube, search supply and demand, and listen to people talk about supply and demand and what sets prices in markets. People that are not coming from the trading world at all. If you see a chart, don't watch that video. If you see a guy on stage talking and he never shows a chart, he might be talking about the truth. Absorption? Okay, yeah. Okay, that makes sense. I was a bit confused after going through the absorption material by Wyckoff, but thanks. Okay. I mean, you can get to a point where if you break out to the upside and there's high volume, that that price area that gave you that increased volume is turns into prices, as I say, getting accepted on low volume. And that's telling me that, if that's what you mean by absorption, that the selling that was there is now taken into the market, and now we're seeing, again, no continuous selling, no distribution in that price range or anything. It was just taken in, and that's it. And then you can end up in that price area soon after with low volume, and moving above that with low volume. You're saying, okay, the selling has been absorbed, so to speak, in that area. Whoever was there has been taken in, and now we have an imbalance showing again. And from there, I'd look to buy, right? So it doesn't like ruin it for me, but I just have to see basically that it's not going to turn into weakness, and that it can actually accept some higher prices, and it's not getting squashed down and being hit with sell orders, distribution style, weakness style. All right, that makes sense. So again, really simple today. With everything is basically bullish against the yen, so I'm just looking for a regular retracement trade. It's not likely to go up in a straight line all day. If it does and it breaks out, I'll let these things break out. We're getting some activity increase here, so it may be, not a lot of weakness that's going to make us want to sell, but enough to give a retracement of some kind, right? It is suggesting that. So that's probably a good lesson if anybody, nobody in here, of course, but anybody who took this breakout is probably in for a little disappointment. And it's a high volume breakout. What do you know? No, go ahead. There's not a lot of questions you can feel free to ask. It makes the time go by faster for me. And if you're asking something, chances are other people may be wondering it. Plus, I could post this video on YouTube, so it's all ends up being good material. Oh, I didn't see what you typed 10 minutes ago. Okay. It got scrolled down, skipped over that. Is the spread more important during the breakout rather than the volume? No, I feel like the volume is most important. If, example, the candle breaks a resistance with a good wide spread, regardless high or low volume, is it still a good breakout? Okay. Um, well, just think logically what happened in the market at that point. So if you have a breakout on low volume, but it's a wide spread, That's very bullish because think logically, really simple. What happened in the market? If you have a breakout on low volume, medium volume, but it's a widespread candle, very, very bullish because what happened in the market? If the volume is not high, not a lot of activity, right? Not a lot of orders coming in. Volume's not high. So why was it able to do that? Such lack of selling. That's why price would move up in that way because the little activity, the little amount, those that were buying, to get filled, you got to move up. It had to move up, up, up because there was such little selling available. So a low volume breakout, right? You know, I like them, and that's what makes sense. So it's really because also you could have a small candle and very high volume, and that's saying, okay, there's a lot of selling coming into that buying. It's not allowing it to break out. So the spread is everything secondary to activity. Is activity high or low, and who is it? But yeah, feel free to ask any questions. At this point, just looking for that regular retracement of a trend, particularly because we got some, medium high volume that suggests on a candle that's not so big, right? Why do we have all that activity? It's the same size as this candle. Look at the volume on that. Same size candle, right? So why the increased activity without movement? Because buying and selling are both active. Now, if selling is active to an increased amount, it's a new high ground, you're likely going to get a fake breakout. The only thing that would change my mind is to get above that and see the selling sort of like we are talking about, absorbed, dried up, and whoever was looking to sell up here, which is a typical price, fake break, is sort of absorbed and we continue from there. But more likely, if we get that type of reaction, that we're not going to make it out, which is good. I want the retracement. Give me 1 minute. I'll be right back. Almost there. More coffee, more coffee. Yes. Oh, right. By Thursdays, I am sometimes very tired. Question. Anything of interest on the charts? Not yet. Okay. Am I looking to short the euro dollar? Is a shorter question. And no, I am not. These are potential entry areas. The short answer is, which you probably missed the initial analysis, but these two are potential entry areas. Ideally, this was sort of a secondary, we talked about it, but ideally in this area, I'm looking for strength to buy. Could be a fake breakout, double bottom, and this is also a fib retracement area. So seeing strength come here leading to a setup or look to buy, If we do get this through this area, that's if we move down. If we get through here, I have no supply. I'm looking to buy, maybe, depending on how it looks, because it's likely to get here and test, and then if it gets through there, to there. But ideally, it's buying here of strength. Reaccumulation at fib zone. Okay. And that's because we're bullish in the background. All right, I won't explain it all again right now. Support resistance levels question. If a support resistance level is possibly going to bounce, there should be high volume at the level so that prices bounce. So instead of using all the other technical tools, 14 or 50 EMA pivots, or any other stuff, why not just use volume at price to assess how much buying or selling? Yeah? Okay, I'll tell you why. Is there to make a potential bounce at a specific level? Any pros and cons of doing so? Yeah. The thing is that I noticed as I was already trading with technical analysis and had more stuff on the chart. Anybody heard of Murray math levels? Yeah, I've done it all. And then I started learning about volume, right? And then I started to notice the behavior at certain things was very telling. And I noticed that, oh, okay, at 50 fib, something happens with volume. Okay, at 14 EMA and on the 1 hour, you see the trends riding that all the time. You see the 50 EMA. And that I already had on the chart because you could put those two moving averages on and see why, instantly why I have those two on, right? And they act as support resistance and test areas. But even without volume data, so then I started working that and saying, okay, why? Now I want to know why the 14 EMA and the 50 EMA act as support resistance. So, right, that's the first thing. Okay, so then it came down to these levels do matter. Technical analysis is showing that price is not random. We see big breakouts and fib retracements and 14 EMA bounces, all this stuff just day in and day out. So these are important areas that matter. And then when you look at volume at these areas, then you hone in on the spots that are important to see what they're doing or what they're not doing, right? So for me, like if I see a setup on a 5 minute, let's say I'm looking to buy, price is moving down, but it hasn't gone to any of my areas, and I see strength, a sign of strength, and a quick no supply, I don't buy because it's not in an area that's that important. It could do that and then end up going lower after that. The setups that come, these are like turning points in the story that are important. If you want to predict what's going to happen in the movie, go to this spot when this really important stuff happens, right? See what happens there, then you'll be able to predict, right? Some other levels are not so important as far as making decisions. And obviously support resistance and the fib zones are like the main thing where stuff gets decided, stuff gets revealed. So it was really just the joining of technical analysis with the volume and understanding why, and it came together. Again, it's all logical stuff. I mean, if you're going to bounce off of support, there's two ways. There's a couple of ways to do it. At least two, maybe more. All right. There's at least two ways to bounce off of the support. It could be because as price is moving down to support, of course, volume increased because buying came in, and that's really the simple version. Typically, they're fake breakouts, and there could be stop losses. I won't get into all that. But obviously, more buy activity comes in. So activity increases. That's what volume is. And you bounce off the level based on an activity increase, which tells you that was buying. Otherwise, you would have broke the level and gone down. So the market got busy and bounced off. Okay, makes sense. The other one is sort of the non-event, where those that are selling stop selling because there's support and there's a little more buying and a little bit of a bounce. And in that case, I don't logically want to trade that, right? Those that are buying into support, buying into down moves, those are the traders that know what they're doing. The volume shows up high because it's large amounts. It's the smart money. But if it bounces off support and there's not a lot of activity, it's sort of a non-event. Who's really in there with me, you know? So that should answer all the questions in there. Let me know. That is my 4:10 a.m. explanation on a Thursday. Again, today is just so simple. There's not going to be much to talk about, particularly if price is not moving. Buying against the yen on a retracement, very simple. It's not likely to move up in a straight line all day. The only thing that would change it would be high volume weakness. Otherwise, it is what it is. It's not hard. People that lost or that are going to lose today, they chase the breakout. That's all. So that's likely the case. Again, what the market really knows is that the yen is weak, the Australian dollar is strong. Euro and pound is still in question. There's not a clean bias, a clean pre-positioning or imbalance or any of that good stuff. Raz, cool. Raz. Okay, good. Raz says, I feel like euro dollar should be a buy. I could be wrong though. If we see 1 hour, yeah, that's where I was leaning there. This is reaccumulation of a markup, which you should know what I mean by that. So that's how I'm defining that. Reaccumulation, accumulation, all that stuff, the best place to get in is off of those bounces off the low. A lot of times they're fake breakouts, especially before they go up and start trending. They'll do a quick fake break and then do their thing, which of course the wyckoff charts have that, so some things never change. There's stop losses down there. There's a lot of people willing to sell off their long positions here. True? Just to note the logic, why I like these things, why fake breakouts happen. A lot of people that bought here, a couple of days, they have their stop loss here, obviously. So if you're looking to buy, there's going to be a lot of willing sellers selling you at a discount. Here you go. Right? Also, there are going to be those that sell the breakout of this range. Definitely those that are looking to sell here, thinking that breaking out of this leads to this. If we can just get out of this. And they may just be selling to buyers. And when all those sellers are gone, that happens, right? Hopefully. So the logic in there. Guess we're entered the summertime doldrums. Oh, yeah, maybe. I'm going to be optimistic. I normally don't do that. But no, really, it's like definitely possible. It's going to slow down. We got non-farm week and July 4th, which of course are always go hand in hand. And that's just going to be okay. It's not a regular week. Big money's not just doing their stuff the way they normally do. There's going to be more getting out of positions. It's going to be slow. It's going to be some that are just not trading at all, some big entities. And then once we return back June 7th or 8th, I mean July 7th or 8th, I think it is for the next week, then that's how I'm going to really determine it. 7th, 8th, 9th, if that's dead and that's not returning, then I'll say, okay, maybe we're slowing down now. And then I'll just keep an eye on things, see when they come back. You don't always have to wait till September for the good activity. It does sometimes come mid-August. Who knows? Just take it as it comes. What else? Thursday. Like I say, the symptom of that stuff, more, yeah, the symptom of that summertime stuff, that slow stuff, is when you start to see it. And I was talking about maybe it's creeping in here because you get a big spike on news, as normally you do, news spike activity, but then there's no result. And for the next 8 hours, the price doesn't go anywhere, and you're literally sitting in the same area you were on the news for like the next 8 hours or whatever. And so you have no result for high volume. So then you realize, okay, price is really dead. It's just spiking around on news and then going back to sleep. And that's typically what you're going to run into during the slow times. So that's the main characteristic to look out for. Just 2, 3 days in a row of flat prices, news spikes, and back to flat. No, I'm not a flashy car guy. I've been thinking about it. Not gonna lie, but no, I don't know. It just it's kind of feels showy offy, you know. Especially like where I drive and the things that I do. Like I don't need to be. It would sit in my garage and do nothing, you know. Maybe on a road trip now and then or something, but I don't even do that much. But driving around Manhattan, Brooklyn, Jersey, nah. You know how many dents my car has just from the parking lot? Doors hitting it. My car just got hit again. I've been hit 3 times in a parking lot, maybe four. My car's been hit in a parking lot, different parking lots over the years. I constantly get hit, and there's a note on my car. Just happened again like 3 weeks ago. Again. I don't even believe the guy's story. I don't know what happened. Anyway. Yes, exactly. The music stuff. Yeah. Actually, I'm thinking about buying a new amp, and I may actually go out on the road with a band. Crazy, but I'm like, I'm gonna use a new amp, and I don't know what to get. I've been listening to demos on YouTube of all different amps, trying to find. It's like I could end up just with a Marshall. I kind of like PV amps though for this band, for this style. Let me get a PV. Yep, 5 minute. Tried and got burned. Realized I had too many moving parts and decided to stick with 1 hour, 5 minute main math. Yeah, the 5 minute scalp stuff. Now that you learned it, maybe you overdid it or something, but you're gonna see days where you go, aha, this is the time to do it. It's not something that every day I'm just gonna go in and start jumping in and out of scalps. It's like I say, it's really for two particular situations, which are a trending move that you expect to continue without as you know, and also the low volume breakout, which does, well, we talked about that. Um, so there are days where you go, this is the day I'm doing that. Because you're looking at a trend and go, I'm waiting for the retracement. Osama, what's up? How you doing? Yeah, anyone just joining, welcome. If you have any questions, go ahead. I'm going to hang out for at least another half hour. Um, but yeah, I do like it for that. Again, like today, we're looking at a trending environment and we're saying, okay, if price pulls back and blah, 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 the regular stuff, if we had, now I don't chase breakouts, but if we had broken out and weakness was not coming in, or you have other situations where, like here, getting through the 618 is likely to get to here, and how do I get in that? That could be a scalp entry off the 14 EMA there, right? Because we know once we break this without weakness, and that's a way to get in. So I think, just you'll know when you see, okay, this is the time to use it and time not to, I think is the final thing to know. So if you're just joining, quick analysis is bullish on the euro dollar because we're in markup reaccumulation. Yesterday there was actually a setup here, didn't go very far, and now we're back. So, or maybe back down there again for a very good setup there, which of course I would be hoping to go further than next time. But that would be a proper setup of strength here. That's the main thing I'm looking for. But really the easy stuff is everything strong against the yen, particularly the Australian dollar strong, but everything's strong against the yen. The yen is weak. So simple retracements. Oh, this guy pulled back. And seeing strength come in on a down move. It's a very simple trending situation. Pound did not have news. Right. So this is a level we had marked. As far as a first place break test continuation and 14 EMA, first area where buyers may show up. So what does it look like? Not bad. We can get into this little area. Again, we had this level marked in advance. Now we can get in there since it's about price areas, not time frames, and see if there's really a concentrated like spike in volume off of that. No, not so much. And then we were just talking about that, right? Bouncing off support kind of thing. But there was a bit of an activity increase. And obviously we're getting a clear result. Now this is very close to the high, which I will mark right there. So I like those lower retracement trades better, but not to say that it's wrong. And at this point, since that high is there, we can also draw that. Oh, okay. 618 overshoot. Would have been nice to see a little more volume on that. But as far as the imperfections, would have been nice to get a little more on that and be not so close to the high. Besides that, it's fine. So it's not an A+ setup. But we had this marked in advance. I didn't even realize it was a 618 also. So here would be the first test, right? And you could get a situation where the automatic rally sets up right there because that's going to be very, very likely. It is a test area, so it's very likely it creates a resistance or it stops there for a little bit just because of the moving averages, 14 EMA. And they could even do that to become an even better setup with strength there. But if there's no supply situation right here, then we'd see low volume. We just talked about that yesterday on the euro dollar entry. If you go back and look at the bounce yesterday, it was a quick thing. There was more strength. Very, very low volume, and off it went until it hit some weakness. So lack of supply here is not going to be able to give you that, right? Then we go into markup. So it's all about seeing the reaction at this point. So again, not the perfect ideal trade because it's a little close to the high. Well, it's the pound yen, so it's 30 pips, but still, it's a little close. And I would like to see a cleaner sign of strength. that goes a long way if we can get down there and see that again and just see a proper candle pop out, showing strength. But just to note, like compare, this is yesterday on the euro dollar, so just this is what we're talking about. So there was strength off a predetermined area, and as it moved up, quickly showed no supply, dropped volume in the moving average area, and leads right to an entry. Again, if there's a bit of weakness here, slight increase, you end up with coming back and seeing the buyers again and saying, yeah, it's all good if we can do that right. And then maybe you do, maybe you don't. Also, at these test points, you can get a high volume selling and say, okay, that's not good. We need to go lower. So important spot. So that's what we're looking at right in here now. Osama asks, volume works best on 1 hour. Well, it's all different views of the same thing. Depends what you want to know. If you want to know the activity for the hour, you can look at the 1 hour. If you want to know activity for the last 5 minutes, you can look at the 5 minutes. Or the 15 or the 30 and all that. But I stick to, when it comes to volume, instead of jumping through all the time frames, which is completely unnecessary. It's like looking at a picture and then taking a step back and expecting it to look like something else. It's the same picture. You're looking at the same thing, just a little further away. It shouldn't be too different. But so the 5 minute gives me the details in the moment in this particular detailed price area. Was there activity increases and decreases here and there? What's happening? What's the detailed storyline? And then the 1 hour gives you the overview of, okay, how much activity are we really talking about relatively? And if something is high or low volume on a 1 hour, it tells you, okay, that hour was very active. And that means a lot going forward as far as positions that came into the market and stuff. But I do like to confirm on the 5 minute what actually happened during that 1 hour. You know what I mean? And you can look at the 15 and the 30, but those two together, that work for me. If something's really high on a 4 hour daily chart, weekly chart, whatever, weekly, I don't even look at high volume on a daily chart, I'm going to get in there and say, okay, what happened on that day? A lot of stuff, a lot of activity on that day, but I want to get in there and see exactly who did what, where, Roz, cool, very welcome. Yes, sir. Thanks for coming. All right, so I'll hang out for a bit longer if anybody has any questions. Yes, the question is this volume indicator the default one on MT4? Yep, nothing fancy. I would never ever do that. I just need to know the amount of activity. Volume is amount. Amount of activity is what we're looking at. And the relative increases and decreases. I've never saw a volume indicator that's worth anything, any fancy volume. I've tried it. The main thing for people is anybody in here who maybe hasn't bought the course and is just completely kind of new and trying to learn about volume. The main thing is to remember is don't get caught up in all this side stuff that's going on and realize that all we're talking about is the activity. Coffee. We're talking about activity increases and decreases. There's more trading, there's less trading. Where and how that activity decreases and decreases tells you kind of who's doing what and the balance of supply and demand in the market. And so, having explained that, like, what does upthrust mean? Leading to climactic action. It means that everyone who bought just bought from sellers who are ahead of the game. Is there any particular broker to look for accurate volume? It's not as bad as it used to be because I've been known to say some brokers are horrible. I haven't really seen horrible lately. in a long time. But right now I'm using this Leverett feed. I had an issue with FXCM. That's why I changed to this. So every now and then I change it up if something looks funny, and also I can compare my TradingView charts, which has, if you tradingview.com, and their charts have a few different brokers you could look at, kind of get the general idea if something's looking weird on one chart, check with the others. But it's not as crazy as it used to be. As far as like, you gotta have the right volume feed, you gotta have volume indicators, volume. What else would you have? I don't know what. Add-ons, plugins, heat sensitivities. You just gotta look at activity. It's more or less activity. That's it. Nothing's gonna help. Three things: price, time, and volume. And fib zone support resistance. Does TradingView have the right volume using FXCM chart? Owanda. Yeah, you can look at FXCM, you can look at Owanda. They're all generally fine and going to be very similar. Again, it's not as bad as it used to be, where it was hit or miss with different brokers. Over the years, they've all gotten more similar and consistent, and that might have to do with how they give you, obviously, the price feed, and who knows. So you can compare on TradingView, FXCM, Owanda. I don't know if they have a third. I think, but anyway, of course, you can get demo accounts and go through all, and you'll see, if one's a little off, it's a little off, but then there's pretty much a consensus and similarity between them all. So here we are on the pound doing the test. And also, just to complain about this potential trade one more time, very, very low volume, by the way, showing no supply, is that it's buying into an area of high volume weakness, but it's exaggerated volume because it's market open and it's always high. It doesn't necessarily mean crap. But as far as if you took a snapshot of this trade, you go, why are you buying with all that volume there? Well, it's the market open spike. But again, right, we were comparing to this, which was a valid setup. We're here now, right, on the pound yen situation, and the low volume is appearing. That is likely to happen. So I may put a small position on this just because of the imperfections of buying high and blah, 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 like I said. So for me, entering would be confirming that not only no supply situation here, which is the case right now, but moving above that. As far as the details of how I would enter in the situation. Now, by the way, this is no supply. It doesn't matter that it's not a red candle. The candle does not have to close down to tell you that there's a lack of sellers. That sentence doesn't even make any sense. Why would the candle have to close down? Price has to move down to tell you there's no sellers? That hurts my brain a little bit. So the low activity here, we knew in advance, right? That's the spot. We also marked this in advance. So this is going to tell us about buyers. This is going to tell us about seller activity. So we see an imbalance now. So it doesn't matter if it's green. It's green half the time because it's moving up to get to the area. Now this could be technically a no supply. All right, whatever. No supply. Very special webinar. But I wouldn't mind a little activity here, not a large weakness. Patience is fine. Quick setups don't mean better setups. A little activity maybe that brings it down and proves again buying coming in, the accumulation stuff. And if you notice, like, it's just all the same old patterns. Fake break, 618. I mean, that's Eurodollar 1 hour. It's all the same stuff. Here's a 1 hour version of that. And we're talking about that. Or in this case, with 618 overshoot, actually. Which, of course, is fine and valid. But as far as entering a no supply, I need to see price get above that and actually accept it for a second. I don't set an order here ready to jump in. Actually, I may take it. So give me a second. And I'm not going big risk, but I just want to see what I'm going to do with this thing. Hold on. Right. I trade on my phone. Where am I? So question is, yes. For it to be a no supply, doesn't the following activity candle have to close above the no supply? Could wait for it to close. You can see it close and still not enter. So for me, it's a matter of reading it in the moment, not a black and white thing. That's because that's how you make the best decision, and we're not trying to program software to sell to you. No surprise. So we can actually just see how price behaves, right? So if we get above that, and now it's clearly setting up. We already knew it because of the moving averages, but it's clearly saying, yes, this is our test area. And why does that happen? Because buyers stop their buy activity. Therefore, whatever's happening here is really representing sellers, and that's what that low volume is. So as far as entry, now this is here and clearly defined. I want to see price get above this. I want to see how it behaves, right? So talk about different scenarios. It pops up and it gets squashed down, right? It pops up again, squashed. So every time it's popping up, this is entry. So this is when I'm watching closely, like every time it pops up, if it's not able to maintain this above this level, no good, right? Supply coming in, selling coming in there. So that's the first problem. If you just have an entry order limit or sitting there and it just takes you in, right? Now imagine it does that and it turns into a sign of weakness and you just got in, right? Now, so seeing it above this level, seeing it stay above this level, right? The price moves up and it sits there, moves up a little bit down. Okay, but we're hanging out up here now. Now, if it's starting to move up and doing it nice and smooth, I don't have to wait for the 5 minute to close. I don't want to miss it. So it's not a black and white rule, right? On the other hand, let's say the 5 minute closes, it's like 1 or 2 pips above the level, and it's just sitting there. And then the next candle opens up, and it's just sitting there. I'm not in yet. I'm not missing anything. Starts to tick back, and I go, well, I'm not in it yet. Oh well. Sit there and watch it move down. Now, if it's starting to pull away, I don't want to miss it. So I want to be in at that point. It could be on a second 5 minute candle. It could be on a third 5 minute candle. That finally convinces me, yeah, we're really pulling away. We're going to markup style now. I want to get convinced. It's all in this little area, though. You could even see, just to talk about all this stuff I'm looking at, you can see on a 1 minute chart that you do a little break test continuation very clearly with a little spike on the buying after you do this. Or the 5 minute could show that break test continuation, And you spend some time up there, you don't see weakness, you've accepted the price area, right? That just makes it better. So that's how I deal with the entries. It's not an exact, So everyone trading my method might get in a few seconds apart, a few minutes apart, but it's all based on the same reasoning. And you know, the idea is I don't get in until I kind of have to, because I feel like price is going to go off without me if I don't. But if it's sitting here, see what more information you get. If it's not moving up, I'm not missing anything. Remember, we're talking about smart money, talking about the buyers buying into down moves and positioning into this down move. And now, again, likely to position into a down move here. Um, and for those buyers to be switching over from waiting for these lower prices to saying, we're not expecting the lower prices, we're going to start buying and mark up price. It's like a big old lever that gets switched. We're going from one thing to the other. There's two ways they enter, right? I want to be convinced that we're actually doing that. And you could see it, you know. Typically, you'll see some aggressive pops up right in that area, and they don't get squashed. They don't turn into weakness, and they close at the high or near the high, right? You get used to seeing how it looks when they kind of switch over. But sometimes it's quick when you just have such little supply, you just go. And okay, it's a no supply, and you get in, and it's that simple. You know, it could be that. Like again, yesterday, euro dollar. Ian, very welcome. Cool. Yeah, I'll do this now and then. So thanks for coming. Do you prefer entering when it pulls away from the 14 EMA slightly? Entering when it pulls away. Oh, I prefer it being above. And if it's sitting on it and it's 1 pip, 2 pips above it, all that crap, I don't feel like I'm in any rush. So yeah, say that. Yeah. So like for example, because this one has a test automatic rally, so that's really what it's about at this point. The 14 EMA just predicted that. But again, like you're talking about, um, an entry that is not so based on an automatic rally and is more based on a 14 EMA test. And again, you have this sort of thing where at this point, I'm convinced and I'm in, right? Close at the high, see the no supply situation. That's a perfect example of there's nothing to wait for. You got to get in at this point. But you know, if this no supply happened, right, and then we just sat here and sat here and sat here, why get in, right? This tells me something. So it's that particular behavior right in there. How do you provide any mentorship in trading? I just, you know, when I trade, I for 1 to 2 hours, Tuesday, Wednesday, Thursday, I do this, just live chart analysis and mark it up for the trades I'm looking for the day, answer any questions. If a trade pops up during the session, I take it. Typically, it's been later in the day, though, lately. So yeah, I do this Tuesday, Wednesday, Thursday for 2 hours, 1 hour to 2 hours. Um, so yeah, it's in the. You can join from the website. As far as like private mentorship or anything, no. I feel like private mentoring is like, I don't know if you want to pay a lot, maybe I'll do it. But private mentoring is like, I could be telling a lot of people this, and I'm just telling one person. I feel like I'm getting a sore throat for nothing. It's not nothing, but it's only one person. I rather have a group, put the video on YouTube, and for the effort I put in, I get more people learning. You know, that's basically why I don't do mentoring. One way or another, I'm always around to ask questions anyway. Whatever, to answer questions. If there's a personal situation with trading or individual unique questions people have. So very predictable stuff here. This level we had marked in advance. I didn't even realize it was a 618. It's also 618 overshoot. It's our test area. No supply. And like I said, I would prefer that it actually came down. Setups that take their time to develop are good. There's nothing wrong with it. Patience pays. So we can get to this area starting from here. This tells us about buyers. And now that gave us our pin, our wick, in that way, we have their box here. So this is all about finding out if buyers are continuing to accumulate from here. If they don't show up, something's wrong, right? If we even get there. If we don't get there, then we're just try to do this again. Well, looks like buyers showed up a little early, maybe. They're excited. 618 overshoot on the 1 minute. Yep, it's all fractal. Draw that fib and get rid of it. Fibs and zones and boxes. Hooray. But if you notice, for people who are learning, my 5-minute analysis and my 1 hour analysis to tell me what I'm even looking for in the 5-minute are the same thing. They're fractally is all the same. The 5-minute just leads to an entry. The 1 hour leads to where you should be looking for entries, not the entry itself. Can we apply these strategies to swing trading too? I don't get much time to do intraday. Here's what I say about that with swing trading. My answer to that is, if you are, because of time wise, not able to trade, hours a day, whatever it is, the idea that people immediately go to the idea that, okay, then I have to be on a daily chart, a weekly chart. And therefore, all the information that I can get that's so valuable off a 1 hour chart and a 5-minute chart at key levels, all that doesn't matter now because I'm a swing trader. Of course it matters. And I'm trading off a daily chart and a weekly chart, so I can just disregard all this valuable information that we get from smaller time frames. So you can see where I'm going with this. If I was trading longer term, or I know that I may not have a chance to get to the chart tomorrow, and and all that stuff, then I would do my analysis the way I do it, because that's how you understand what's going on in the market. And I would give it from a daily point of view or a larger time frame, you're just getting your basic levels, a very, very basic version of this analysis with support, resistance, fibs, not worried too much about volume or moving averages or anything. And from a daily point of view, just mark some key levels for your target areas and your stop loss, obviously, and get a bigger picture of, looking for larger moves. And that's all fine. From a technical analysis and trading a daily chart, weekly chart, that's all fine. But use the information that you get from smaller time frames to help you decide on those things. So you can have a daily chart and a level marked up, and when price gets there, it gives you a lot of information. And you could be looking at that 8 hours later and saying, okay, that was really good information off of that 1 hour chart and a 5-minute chart off of that support. It says that it's likely to bounce and likely to trend up now. And then you can get into the trade. It's not so, particular, like small, particular price entries that you're looking for. Is more of a bigger picture. And so that's the way I would say do it. Big time frame analysis, that's all fine. Smaller time frames give you information about things. And if you check in, once a day, you can zoom in on these things and figure out what's going on in a little more detail, and then back out and say, okay, what does that mean for the bigger picture? What do I want to do now? That's the way I would do it. So if you were to learn to read a chart like me, you'd pop in, once a day for 15 minutes, right? Anyone could do that, or almost. And then I'd make my decision about what the daily, weekly chart is suggesting that I do. That would really help me just to go back and see that. So that's what I would do. Give me 1 minute. I'll be right back. You want me to read that aloud, I'm sure. What did the British say when they ran out of tea bags? What did the Brits say when they ran out of tea bags? We have no supply, ladies and gentlemen. We love him. He's the best. Thanks, Gavin. I'll never forget the day I heard you say, weakness appears on up bars. What? Price has to move up to tell you there's a lot of selling. I said, what are you talking about, man? And then I dug around and researched this idea, and it got me on track, I must say. Thank you, Mr. Gavin. No supply. Welcome. So speaking of no supply, we might be getting that again as we go up here. So I'll hang out and see if this sets up or not before I go. As far as everything else, again, this is ideal. This is a maybe. If it looks really good. Pound dollar, I wouldn't touch it because those two don't know what they're doing. They're just hanging out together. Australian dollar is strong. Not buying into the high. Down was treated like an uptrend. We know this stuff. Oh, good. Come down. See, this is what I was talking about also with. Okay, so the main thing here, why these uptrends exist, is because the yen is weak, not because they're all strong against the yen. Like you could be completely flat and go up against the yen. Nobody could be trading the euro whatsoever. It's still going to go up because it's all relative value. If the yen is going down, the euro yen is going to go up if the euro does nothing. So this is an example of what I was talking about, where the yen situation should be driving the setup, which would mean if these guys all were showing a potential entry, not just pound yen. Are they? No. If anything, they look like they're just kicking off a retracement. You see the mismatch? They're just maybe going to be able to do that. Look, no strength really came in here. Not much strength in here. This is new low ground we haven't seen in hours. Didn't attract too much activity. We might be trying to get there now, right? And then I'd be buying this, and this is going down with the others maybe, right? Because the pound itself is not strong. That's not why we're doing this. You see. So another cautionary piece of information on this imperfect trade. There's reasons why it can work out, probability wise. Or I like giving it a grade. So this is like a C plus, maybe a B minus, not even 6.5 out of 10. Now, if everybody moved down and kind of showed strength here, strength there, some of them are at some key levels, it's all coming together, and we get A plus setups. Question. Well, I keep an eye on this crappy trade. Um, I might put, if it confirms really cleanly, 5-minute cleanliness goes a long way. The lack of supply here was nice. This is okay. Anyway, I'm going to put a small position. I'll let you know if I do that. But here we are testing again, right? How to filter trades for that session to trade. How to filter trades for that session. Meaning how to trade properly for the time of day. Is that what you mean? Like keeping in mind the time of day and what you should be doing at different times, maybe? I think that's what you're asking. Look at that previous candle. It may be a doji. It's not a down candle. It's nice and bright green, like call that a CC DeVille candle. That is no supply. Yeah, it is. Osama, I'm not sure exactly what you're asking. If you're asking about time of day, lately setups have been later in the day, but that could be a phase. I'm sure it is. No, okay. How to know which pairs to choose for trading? Oh, well, the main thing that gives me a healthy market, the way I like to see the market, is that the US dollar and or the yen are driving everything. So as far as choosing a pair, now this is in an ideal good situation, which happens more times than not. You have the yen and the US dollar both weak or both strong, or at least one of them like we have today, the yen weak. So that's the main thing I'm looking for to drive a move. Yes, I am keeping an eye on the pound yen. Hold on. So then from there, like in this case, if we're talking about which pair to choose for trading, like you asked, so to look to buy against the yen and the one that's setting up the best if there's multiple ones. So that gives you sort of a starting point. Okay, what does the market know? Right now, the market knows the yen is weak. So now I know that buying against the yen is the cleanest situation here. What's the most bullish is probably the Australian dollar, but it doesn't even matter. Everything's bullish against the yen. It's consistently been weak here. So now I know I'm looking to, and whatever looks best. And this is not the perfect situation as I explained here, but that's giving maybe an opportunity here for a small position. But the main thing I'm looking for is something a little cleaner that may or may not happen. So that kind of led me to that, right? Hopefully that helps. All right. So I want to see about this potential entry. It has to look really good, but at least this is that point that we talk about, we can actually see in real time. But again, we're testing for sellers here, and there goes the volume dropping off. No supply. Price sitting here doing nothing is exactly what you want to see. Buyers have stopped their activity. They go silent. The computers stop beeping and booping. And we're listening out for sellers. They're not here. So this is good. Are they going to switch into markup, right? That is the question. All right. That's really it as far as in any interest at the moment. These guys, I don't love it. Yeah. All right, we know what we're looking for. The good quality textbook stuff may come later. Tired. 5 a.m. So again, sellers not showing up. It's buyers for the taking, and this is when I want to get convinced that they're actually marking it up. We can look at the 1 minute up in there, since about price areas, not time frames. This was the first little, let's see what's up here, right? And there's the volume. Little bit of selling. Not horrible. We can get there again, and maybe we get this type of volume. And then that would be good. Okay, here's an an attempt. Get some detail. Okay, see, now, like I said, I want to see it accept new high ground. See, it popped up there. Now, if it can't get up there again, or if it tries again and gets squashed again, and the volume's high, right, then there's some selling coming in. 5 minute closed, to really give us some perspective on it. It's all very low activity up here. It's all very good. So this, it's not just theory. You get to see it. This is how patient I am, and this is why simply getting above. See, this was the initial automatic rally. We get it right on there. Simply getting above it once, twice, just by a little bit, half a pip, 1 pip, not a good enough reason to get in, right? This doesn't say it's go time. We're doing it. Not at all. Not yet, at least. Test the waters a little bit. So that's what happened from a 5 minute point of view. Slight increase. Is it high volume? Is it weakness coming in high volume? No, no, no. So buyers for the taking, see what they do. Typically, if they're patient and not marking up, there's a reason. I was going to actually try to finish up a final mix and master a song after the session, mark up my levels, set alerts, and then go do that. I think I'm too tired though. Shit. Push back the release date a little bit. All right. So that didn't happen. You see how patient I am. You see how logical it is to be, just focus on this area and watch it and be patient when it gets there. Otherwise, whatever. Now, if it's going to come down, I can look away. I can set alert back at the high, or 0.2 pips above this high. Set an alert. Now, if it does want to come all the way down here, again, nothing wrong with that, and seeing accumulation and strength again through here. Now, in the bigger picture, if the yen pairs want to have a larger retracement, that can all happen. Larger retracements and all that. And we all know that. I went through everything, right? Okay. Any questions before I go? I think everybody knows what I'm looking for here. Again, this is not an A+ setup, but if it's clean, I'll put something small on it, maybe a 20% of my max risk, something like that. And see it get through there on low volume, right? Sit there, be able to accept it, and see the markup style. Okay, cool. Amar, yes, good luck with everything. Fight the good fight. You'll be back. Fall, yeah, that's a good goal. Maybe shoot for September, where you're aiming to get going again. You have a little time, do what you got to do. Cool. All right, guys. Been fun. Can you just recap the strategy? No supply. You know what the best thing to do is? Watch my YouTube videos. Yeah, exactly. Amar said it. Go on YouTube, type Pete Fader, and watch away. Many, many, many videos. All right, guys. Have a good one. Have a good weekend. Good having you. And for the regulars, I'll see you on Tuesday. Of course, any of you want to sign up for the live sessions, it's on the website. All right, guys. See ya.